Pulitzer Prize-winning columnist for the New York Times, Jim Stewart, joins us. And Jim, I love talking to you about taxes. Just in general, you've done so much work on it, and you and I can talk for ages about it, particularly when it comes to New York. But let's start with the president last night. I mean, how he can possibly say that he's not releasing his taxes because of an audit still? Give me your take on that. Is it really possible?
Well, no, that's not possible. First of all, the audit never would have stopped him from releasing the taxes if he wanted to. That has always been, utter nonsense. I can't imagine what it is except for the fact that he just doesn't want to release them. And given that the New York Times has now pretty much unveiled the largest part of what's in there, now going back for 2 decades, why not? I mean, the Times reported he only paid $750. He's claimed that it's through many legitimate tax breaks, which, by the way, is correct. I mean, the real estate industry has a cornucopia of tax benefits baked into the tax code going back to the first one. It only got better in the 2017 revision. So let's just put it out there. I don't see what more damage could possibly do, but he must have his reasons. Yeah.
Now, Jim, I'm sure you and I both know a lot of wealthy people in high tax states and cities that are trying to figure out what a Biden presidency would mean for their overall tax rate and whether they're going to have to actually leave if there is no elimination of that cap on the SALT deduction. What's your take on where things stand in terms of just tax rates between these two candidates?
Well, the tax proposals this time are, to me, they're so fascinating, and they've really been overshadowed by, bigger issues in the campaign, starting with the pandemic. Biden has put out a pretty detailed, comprehensive plan for, revising the tax code if he gets a majority in both the Senate and the House. Trump hasn't said very much beyond, of course, his 2017 reform. But I think on the Biden side of things, there are a couple of issues here. One is philosophical. He is proposing 2 major changes that many taxers have long advocated. One is to treat capital gains and ordinary income at the same rate, which harkens back to the Reagan reform of 1986. And the other, which I think hasn't got as much attention, but very important, he wants to eliminate the possibility of never paying capital gains taxes by either holding on until you die and giving it to your heirs tax-free, or in the case of real estate developers like Trump, flipping these properties when you sell them into other properties and then claiming this so-called like-kind exchange exemption, which he wants to get rid of. And then more specifically, he is talking about raising taxes on people who own $400,000, lowering them modestly for people who make less. The Tax Foundation analysis suggests overall that the tax increase is in the low single digits. It's not a massive increase generally, but it will hit those high-income taxpayers. Maybe offset by the repeal of the state and local tax deduction, which you brought up. He has talked about getting rid of that. I don't know that he's firmly pledged to do it, but that, of course, would benefit high-income earners in the high-tax states like New York and New Jersey. But a little focused on element of the Biden plan is that he will cap total itemized deductions. It's a complicated formula, and he doesn't want them ever to be worth more than 28%. So even as he takes away the SALT deduction, he may be putting some of that back in kind of what's a little bit like the alternative minimum tax.
Shepard Smith here. Thanks for watching CNBC on YouTube.